Imagine waking up every single morning knowing your money is working for you while you sleep. No massive down payment, no dealing with tenants, and no surprise maintenance costs. Just pure, stress-free passive income. Sounds too good to be true? Well, it's not. In today's video, we'll dive into Canada's top real estate investment trust, otherwise known as REITs, R-E-I-T. This one is going to be SmartCentres REIT. The ticker symbol on the Toronto Stock Exchange is SRU.UN. And I'll show you exactly how you can make $700 in passive income every single month without the hassle of owning a physical property from this single REIT. Plus, we compare it to a physical rental property, and I bet you want to stick around for that. Let's dive in. First of all, let's talk about what a real estate investment trust actually is. A REIT is a company that owns, operates, or finances income-producing properties, and the best part is that by law, 90% of a REIT's profits must be distributed as dividends to shareholders. I think that's amazing right there. By paying out 90% of their profits as dividends to shareholders, this is where it gets juicy for us investors. Even without owning a physical rental property, we can still, benefit from, the income and also the growth in real estate from this company's investments. So now let's take a look at SmartCentres Real Estate Investment Trust right from their website, okay? So you want to scroll down here. So I went to the website smartcentres.com/investing. So you have, a lot of information here. Hey, passive income seekers, quick announcement for you. Are you feeling frustrated and overwhelmed with the idea of starting to invest in the stock market? Do you want your money to start working for you and gain capital appreciation, but you don't even know where to start from? You know what? I've got you covered. My husband and I have put together a 5-step checklist for you to get started with investing in the stock market by buying exchange-traded funds. Those are ETFs. It's just a basket of assets that increases your diversification and reduces your risk over time. So make sure you click the link in my description or also on my channel to grab your own copy right now before it's too late and start investing. Let your money start working for you while you sleep. Let's jump back into the video. For you as an investor, you always want to dig deeper into the financials, into the company's mission and vision, things like that, right? Make sure it actually aligns with what you want to invest in or put your money into. So looking at SmartCentres right here, so like I said, the ticker symbol is SRU.UN. Currently, as of March 14th, remember the market is closed over the weekend, and I'm currently filming this video on the weekend. The stock price is $25.17, okay? So looking at the corporate overview, SmartCentres Real Estate Investment Trust is one of Canada's largest fully integrated REITs, with a best-in-class portfolio featuring 195 strategically located properties in every single province across the country. SmartCentres has 12 billion in assets and owns, a lot of square meter of income-producing, value-oriented retail space with, this is the best part, 98.7%, so almost 100% occupancy, okay, across Canada. So when you're seeing big stores like Walmart, you're seeing your superstores, best believe they could be owned by SmartCentres Real Estate Investment Trust. So by you investing, if it's just one share you can buy, $25 worth of share, guess what? You're investing in that big retail space. I think that's really amazing for us smaller investors. Okay, let's look at some of the features. They own 195 properties. Like I said, 113 Walmart anchored centers, billions of assets, lots like 3,500 acres of land, lots of square feet meters, and their occupancy rate is really, really high. So I think that's really awesome right there. For the purpose of this video, I won't be digging into all the financials of this company, okay? But this is where you can find all your investment documents. If you want to invest in this real estate investment trust, take a look at their annual information from their annual reports, okay? Taxation, distributions. So you want to take a look at those. So now let's talk about numbers, okay? Because at the end of the day, that's what really matters to us investors. So SmartCentres REIT has a dividend yield of about 7.35%. You can see that right here, 7.35%, meaning for every dollar that you invest, you're getting about 7 cents back every year in passive income. So it's like planting a money tree that keeps dropping cash every single month without you lifting a finger. I think that's amazing. So looking at this annual yield, how much would you have to invest to make $700 every single month in passive income? Remember, you can decide to, invest more, right? You don't have to stick to this $700 per month. You can decide to make $1,000, $2,000 and invest more money. It's all up to you, right? So for the purpose of this video, for $700 per month at this rate, okay, that means you'll be investing about $114,000 in SRU.UN to reach that goal. And like I always say, if you're just starting out in investing, please take your time. There's something called dollar cost averaging. You don't have to invest all that money at once. Honestly, you don't have to. You can start with smaller amounts and build your wealth over time. Consistency is all that matters here. So don't be scared about the big number. Just do what you can every single month, every 2 weeks, and before you know it, you've built your cash flowing machine. I would like to draw your attention to another important metric on the screen. Take a look at the payout ratio, guys. Take a look at that. That's 133%. That's just crazy. Remember I told you at the beginning of this video that REITs are, by law, REITs are required to pay out 90% of their earnings, of their income to shareholders as dividends. But this company is paying out over 100%. I think that's beyond crazy, right? So it's something to keep in mind. What's a dividend payout ratio? The dividend payout ratio is the total amount of dividends that a company pays to shareholders relative to its net income, okay? So this ratio is the percentage of earnings paid to shareholders, you and I, via dividends. The amount not paid to shareholders is retained by the company to pay off debt or reinvest. So I'm thinking that SmartCentres is actually very established, right? It's very established company, very established REIT already, that they can pay this much percentage out as dividends to us shareholders. I think that's really amazing. Let's also look at the dividend payout, the historical dividend payout for this real estate investment trust. So you can see here on the screen that this REIT is paying or has been paying dividends consistently since 2023. So if you look down here, I think around COVID, remember we had COVID 2021, 2020, so they had some issues right there, as you would imagine, right? So they were not consistent with their payouts. Look at 2019, the payout was not consistent then, but if you scroll up, right from 2023, it's been consistent. So I think that's a good thing right there, that they've gotten their balance and they are more established right now. That's what I get from this history. So now let's compare owning a REIT to owning a rental property, a physical rental property. Say you buy a condo for $500,000 with a 20% down payment. Remember, this is not your principal residence. It's an income generating asset. It's for an investment. So most times you have to put down a 20% down payment for that property. So upfront, you're shelling out $100,000, even without knowing whether this investment property is going to be worth it, whether it's going to bring in cash flow at the end of every month. You don't know that, but you have to put in $100,000 upfront. Then, aside that, you're thinking of property tax, maintenance, vacancies, tenant headaches, you name it, right? After all that, your cash flow might be only a few $100s a month if you're lucky, even with all the stress you have to deal with. But with this real estate investment trust, SRU.UN, there's no property management, no repairs, and no dealing with tenants calling you at 2 a.m., to fix their leaking sink, right? It's truly, truly passive. You buy shares, sit back, and then enjoy the monthly cash flow. Investing in SRU.UN offers several advantages over owning physical rental properties. There's liquidity, right? Unlike real estate, having a physical property, REIT units can be bought or sold on the stock exchange with ease, providing greater flexibility with your money. Also, think about diversification. SRU.UN's portfolio spans numerous properties across Canada, reducing the risk associated with any single real estate property in a single location. The third one is management. Professional teams handle property management, and this frees you as an investor. You don't have to be dealing with issues with vacancies, issues with tenants, right? You are just free and enjoying your passive income indeed. And the fourth one that we'll look at is lower cost of entry. Tell me how many people have 100,000 to shell out just like that in Canada. With the rising cost of everything, people are barely getting by with their income. But by investing in a REIT like SRU.UN, you don't require a big amount of money to start investing in real estate, making it accessible to a broader range of investors across Canada. So, what do you think about this real estate investment trust by SmartCentres? Would you rather invest in a physical property or invest in a high yield real estate investment trust that we just talked about? Or would you rather do both? Drop it in the comment below and I would like to hear your thoughts. If you found this video helpful, make sure to hit subscribe, hit the like button, and if you like videos like this about passive income from the stock market, truly passive income, watch this next one.